there was a number here that came out recently, you know, that
50
real
trillion.
wealth was diminished by some trillions of dollars.
50 trillion, yeah.
Okay, so $50 trillion went poof and went away. So the federal government and the Fed create $50 trillion out of thin air and pump it into the economy. There's been no real effective increase in money supply. They're just replacing what's gone.
Well, and it's not actually gone because most of it is debt that's never been monetized. It simply doesn't exist in the economic system. Okay, it's all held out of the economic system in this huge pool, right, of non-monetized debt. It's sitting out here as paper instruments, securities, derivatives, all this stuff, mortgage-backed securities, right? All this stuff. It's not money in the economy per se. It's not until its losses start to become apparent. That's why the dollar index keeps growing up, because as the losses come into the system, they have to be paid, and they put a demand on dollars to pay them in dollar terms. But it's non-monetized debt. When it starts being monetized is when you have to watch out, because that's when the money starts showing up in the system that becomes inflation. So all this stuff, if you consider a normal default rate of 2%, if there's $650 trillion of these instruments sitting out there, you can kind of get an estimate of what's going to have to be eventually liquidated as actual default, and that's if it stays at 2%. It's going to take more time.
Yes, Jeff, we hear a lot about the liquidity versus solvency issues. And the twist you're bringing on is interesting, is a technical issue, not liquidity and solvency, but technical. So do you see a manifestation of that breakdown in a bank holiday or a market closure? Or
it could get to the point, yeah, see, that's a very good point, very good point, is that at some point, that may come that the breakdown itself creates such a physical, mechanical problem in simply doing the integration and reintegration of all these platforms and all these systems, trying to figure out which ones are they going to retain, which ones are they going to throw off. I mean, that was a lot of what we did in migration. We would determine what systems were going to end, and then we have to write the applications and the networks and migrate them over off of the old systems so we could throw them away, because they were no longer technologically or otherwise viable, economical for operation in the company. So you get to a point when the volume of work exceeds the number, the demand of work exceeds the number of engineers and people that are truly capable of doing this. You could have a point where that itself could force some level of halt in the restructuring, or additional problems in dealing with the mechanics that could create a bank holiday. That's crossed my mind. I don't know. Or a series of them across several banks. They just wind up trying to take on and collapse too many banks at one time. I mean, you got a perfect example of that right here in El Paso County. When we did the FDIC, when we took over the FSLIC and moved to the RTC, and that's just a miniature example. You had 2,000 to 3,000 people in this county who were living in houses that either they couldn't track the mortgage owner, mortgage holder. People didn't know where to send their payments because banks failed and rolled over so fast, and the FSLIC and RTC were crashing and merging one bank into another bank. Database systems were incompatible. They couldn't track them. When I went to the Dallas office, some of you might have remembered back in the 80s, the 60 Minutes episode, in the Dallas regional office, they couldn't even find the information on the building they existed in. When the FDIC moved into the building in downtown Dallas that was foreclosed on, they didn't even know who actually held the note on that building and couldn't pay rent. They just moved into it. They got the keys and moved into it from a leasing agent. 14-story building. This was going on, it went on massively here in El Paso County. There were 7,600 homes at the height on the market. And about 2,500 of those homes were being lived in people that had either been foreclosed on and never had to move out because they lost track of the information, or they'd send a check someplace to the last bank and it would come back returned because that bank was closed now.
Is the FDIC going to crash and burn pretty soon?
Well, no more than any of the other entities. Okay, no more than any other entities for the time that they last. I mean, the FDIC. You'll notice if you watched 60 Minutes Sunday before last, when when they had Sheila Bair and the FDIC, and they talked about how banks are taking over. They talked about that whole process. At that, she was interviewed, and she said right there, which that
60.
interview, huh?
She said 60.
She said 65 billion was
And
all
then
that they
a
would,
week later, it was
was-
500.
was all that they would need, right, for till 2013. And a week later, or that week before the interview on Wednesday, before the 60 Minutes episode on Sunday, Chris Dodd had introduced a bill, or a House bill, or a bill in the Senate bill, for $500 billion in authorization to 2013 for the bailout, or for the bank takeovers. So, you know, and he said right there when he announced the bill that they were in full communication with the FDIC on the requirements for that bill. So what happened
Maybe she
between
was
when they
on
did
the-
the interview and when they introduced the bill, to make it go from 65 to 500 billion? Okay, we're going to have to go to one more question, and let's see.
Recently, we've seen a tremendous increase in the money supply, correct? My simple mind tells me that when the money supply increases like that, without...
I mean, this graph.
Kind of like that, like a hockey stick, like that. That, in my simple mind, that tells me that we are going to be experiencing some inflation here probably shortly.
Yes.
Yes. And so, yes, I'm the first to agree on guns, ammo, gold, that kind of stuff. But buying that residential home for 50 cents on the dollar today, isn't that inflation going to make that residential home a good investment also? And
Yeah,
other
okay, but-
things?
Yeah, except for the fact that it's done that in other countries that have high savings rates, because remember, at the same time that's happening, credit requirements are contracting, making it you got to have a much larger down payment, right? So it's going to be much harder, if you can't buy the place outright, it's going to be much harder for you to get a loan, even if unless you have 20, 30, 40% down, like we used to have to do many, many years ago. So you have, I mean, that's going to be the effects of the credit contraction that goes on, is that you've got all these homes that people can't buy because they can't get a loan against them. I mean, that's one of the two problems that's going on in the banking system right now.
But given that kind of increase in money supply, isn't it quite possible that we could see stuff worth 10 times what they are today?
No.
Only if there was savings. Oh, that's
For example,
only if there was the
If
savings
the
in
credit's not
For
available, it's
example,
not going to be
A
valued.
1975 Dodge pickup truck was $5,000. That same, an equivalent pickup truck today is $50,000. And who's to say that we couldn't see inflation like that in a very short period of time?
Wouldn't you see
given
that in
progression?
groceries,
Again,
but
because
not in tangible assets, because you can get the credit
people's
back?
focus is going to narrow, number one, particularly when it comes to the used car market, because all kinds of cars are going to become very cheap, okay, not more expensive in that sense. There will be some offsetting inflationary effect, yes, but the same thing in the housing market, like I said, is the same problem is that people are going to start focusing on essentials, number one, and number two, credit requirements are going to contract very, very tightly.
They already
So
have.
if you don't have real cash savings to buy something, you can't loan any more money on your house, you can't get any more off your credit cards, you can't do, I mean, this week alone, they sent me a notice on 2 of my credit cards, arbitrarily reducing my credit limit for cards I paid on for 15 years on time, every time.
FHA just came out, they will
Right.
no longer do cash out.
Where are people going to, if they don't have savings, which we have not for the last 3 decades, where are people going to get the money to buy all these things? So houses, what you're saying is true in countries like Japan where this has happened and they have a high rate of savings.
Well,
Because they can fall back on the fact they have savings and no
that's
credit.
exactly what I was going to say. It's the time horizons, and if you do have the cash. I mean, the people who made out very well in the Depression were people who were sitting on liquid assets, particularly cash, and could buy up the good deals. And then you have to be able to, if you're 85 years old, that might not be the big one. But if you're 25 years old and you can take that asset and wait it out, then it'll be. And then don't confuse price and value.
Right, right.
Because prices will go up.
Well, and then,
Values may not.
it also will tie to supply and demand. You
But yeah, but there's gonna be a lot of, there's gonna be a lot of, this one's gonna have a lot of strange permutations because this is unlike anything that has ever been seen anywhere in the world at any time. There is no, what did Mark Twain said? Is history...
History never repeats, but
itself,
oftentimes it
It
rhymes.
may rhyme. This is a rhyme, but it's not gonna be, it's gonna be strange, iambic pentameter.
I mean, I have 80 logos.
Okay. I think we're done. Thank you very much. Appreciate it.